like just wait till it gets negative. Across Europe, there's actually a lot of negative interest rate debt, more so than here. Like, but and that's like a real thing, and it's kind of weird but like and I think that like especially around like a savings account where it's like money that you want to have on hand, so it needs to be liquid, but it's also like money that you really don't touch for a couple of years. um, like cryptocurrencies are a really good solution um, to that because like while you don't, well, I mean there's some cryptocurrencies that do enable you to earn interest on your crypto, but with like things like Bitcoin, which I view as like pretty much like the primary like savings like crypto, um, like just because it's been around the longest and it has the most liquidity, meaning the most people are buying and selling. So like more people are setting the price all across the world, so it's like an accurate price. Like it's very difficult to manipulate the price of Bitcoin, um, and since everything about it is fully public and fully known, and like there aren't like insiders that have any type of advantage, it just has these qualities to make it a really strong form of money. And because of that, it's actually really competitive as a savings product. So where you would like otherwise like lock up your money in your bank account, like in that savings account, like you're like you're expecting like a 2% gain on that. But like what we have to weigh is the alternative of holding that money in a savings account where you're earning like 1% versus like holding that in something that like might have a lot of day-to-day fluctuation, but like on a long term, like a 4-year plus basis, it has things built into the system that and just because it's like an emerging asset, like the ROI from just like buying and holding Bitcoin, like 2%, like that'll happen in an hour. And there's risk in all.
Brian, can I interrupt you?
Yeah.
What did you say about did you say there's cryptos that you can earn interest on?
Yeah.
How do you how does it work? Is it almost like a dividend or something, like they're reinvesting into the crypto? Like, how does it work?
Yeah, so there are a couple different ones. So like,
do you kind of know what I mean? Like
yeah,
crypto, like, yeah.
Well, so some of them, like, so the one that we'll probably talk about a lot later is the one that I think I was sharing called Hex. With that one, like you get it in exchange for time locking your funds, and the interest that you earn, that comes from new money in the supply, like that, like the interest is divided, it's effectively printed. Like Hex doesn't have a fixed supply, it inflates at a constant 3.69% per year, and that
that's from more mining, but more mining, right? I mean,
no, it's not mined. It's just
okay.
like, but like that's just one way where like
Hex is a whole nother conversation for me. Obviously, I still want to learn all about that.
Yeah, so like it's like
Bitcoin, like I've told you, is the only thing I own anything in. So obviously something I want to learn more about. Hex.
Yeah, but no, that's good. That's a good question, because like like Bitcoin's one where you can't really earn interest just by holding it, but there's like a whole other class of cryptocurrencies where just by holding it you can earn dividends.
The time locking thing, does that mean you set you can't sell off a portion of what you hold for, and then you can earn just because you're staying in the market,
Yeah, exactly that. Yeah, and
that's interesting. Okay.
They like reward you, like the people that earn the most interest are the ones that lock their funds for longer and for and for more. And so like we'll talk about Hex, because I view Hex more like a retirement product. I view that like a 401k, whereas I view Bitcoin more along the lines of like savings, where it's like I'm not.
Yeah, Bitcoin is your savings. Okay.
Yeah.
And Hex is like more of your nest egg, a retirement account.
Yeah. That's because like I view Bitcoin on like 4 to 8 year time horizons, like whereas like my Hex, like the majority of my time locks end between 8 and 15 years, and so like I view that as like kind of like how you would a 401k, and then like just like the Bitcoin as the savings, and it's a like while you don't earn interest just from holding Bitcoin, just by having it as collateral, you can get a really good line of credit. It's just like a secured loan, and that's what makes it like really powerful. Where like because it's so liquid and
Institution would offer a line of credit with a Bitcoin as a collateral.
yeah, like there's a couple like here I'm gonna go ahead and share the screen so we can log this, but um, I'll pull up a couple of these different products that like if you have Bitcoin as collateral, you can here, one sec, let me pull up my you can pull, you know, you can just get an easy like no credit check, no questions asked, line of credit, and it's like this is one of the biggest areas of growth in the in just like the crypto ecosystem is this whole notion of borrowing and lending.
Did you
So
do this for?
Okay.
can you guys see my screen?
No, not yet. But can you do this for a HELOC as well?
For a what?
Like a home equity line of credit?
Oh, yeah. So like kind of how you can borrow against your house.
Yeah.
Yeah, like you can borrow against your Bitcoin in a similar way.
Okay.
And
Wow.
it's, you're the one that answered this question. Like when you're like, say you have a $1 million home, and like what would like say you wanted to borrow like 100K, what would the term like what might terms of that line of credit look like? Do you have any idea?
In terms of that line of credit on $1 million home?
Yeah, like if you owned $1 million home and you wanted to extend a line of credit, you wanted to borrow against your house, like what type of interest?
So take out a HELOC.
Yeah, exactly. You take out a HELOC, but I don't think that's on regular. I don't think that's on like regular mortgage type interest rates. I think that's more so probably on interest rates towards like of what you would do on an investment. So probably I've got to think your interest rates more towards 8, 9. I could be wrong.
Let's look it up.
Well, Bridges, you're in that space. I mean, I see when I do loans for doctors, I see HELOCs. Is it more variable? Like, is it kind of like
but I don't know. For HELOCs, is it a mortgage rate closer towards your 4% of what you find right now, or is it higher up towards 8, 7%?
I think they're definitely higher. I feel like
I'm not mortgage
and I
person.
don't know, but I feel like with a HELOC, they probably obviously gotta have equity against your property, right? To hit that. And then I think it would be some sort of locked interest rate plus like when we do line of credit to Bank of America, it's X amount plus prime rate, which is like, the federal prime rate. So it might be 3 or 4%, which is like probably this is what rates are at right now for the business loans that I do, which I'm business, you're residential, and it's plus some sort of a variable rate. So I think it's anywhere from like 6, 7 to 10%, but I don't know. Back to how crypto gets involved.
Yeah, I mean, like like the reason why you can borrow against your home is because like it's something that like you can't just like take off with it. Like it's something that like you can the lender can like prove that it's there, and they can like repossess it if needed. And
of course, it's like taking a lien on. They have a lien on the property.
Yeah, right? and then also like because it's like it's fairly liquid. Like you can sell a home. Like if the bank needed to like repossess the home and then like liquidate it, like they can do that. But like it's just like that with Bitcoin. Like with this site, if you guys can see my screen, can you see that? Are you looking at Nexo?
Yeah.
Yeah. So this is a like this is a platform that I've talked to Hema about. It's like you just hold your Bitcoin as collateral or other cryptocurrencies. It offers you can you Bitcoin or Ethereum or whichever one you hold, and whenever you need to like make a loan or withdraw a loan, they offer you like you have to, like if you have $1,000 worth of Bitcoin, you can get a $500 line of credit. So it's 2-to-1 secured. So, and that's because just like with the price volatility, like to start the loan, you have to be 2-to-1. But then like if the price of like if the value of your collateral goes below like some limit, they'll take from your collateral and start making payments against your loan. And so like unlike a home where like you're still in possession of it, but and like you're living in it, like when you're borrowing against your Bitcoin, you actually have to deposit your Bitcoin with the lender. And so that's a risk too, though. Like, and it's because like the safest way to hold your Bitcoin is to like, create your own wallet. So don't hold it on an exchange. Don't hold it where you bought it, but to like withdraw it to your own wallet. And then like, that's, so that's what you like, really, you don't want to like just store your money with someone because they get hacked and it could go away. And like, there's no like reprinting these things to like make people good. Like something like this company has insurance, but like if like the Bitcoin I had on here, like got like stolen or somehow lost, like I doubt that the insurance claim would even would cover it, for everybody. And so like there's risk in doing this. But like, the reward for, taking that risk is that like you can get like right now it's like you can get as low of rates.
Well, you said, Brian, you said no credit check, right? So that would be a benefit. And then also, if it's, a little bit better rate, right? I mean, because it's
like this, you can get as low as 6%. So that's if you like. So Nexo, they have their own cryptocurrency. It's called Nexo token, and if you hold Nexo, you can get like a discount on this interest rate. And when you're holding it, you actually get some like it's a coin that I don't really have much of. But it is like another one that's like you can like earn interest on holding it, because by holding it, you get some of the interest payments. Like you get a cut of the revenue from Nexo. So they make a loan, and then by holding Nexo's crypto token, you can get, you can get paid from that. And so they try to incentivize people to buy and hold Nexo by offering like, really low interest rates to Nexo holders, and by offering the revenue.
So Nexo itself is a lending institution, but it's like, and this is what I don't know enough about these other cryptos. It's just how like the Nexo coin powers this company or whatever. Is like, it's like their pot of money, right?
Like the Nexo coin doesn't really do anything. It's just kind of like
it's an incentive.
Yeah, just like an incentive. It's like it's like with this one, it's kind of like a.
But if you hold it, that's how they can lend it, right?
Well, so they're not lending Nexo. They're lending dollars.
So money.
Yeah,
right.
you put Bitcoin or Ethereum or like you can do a lot of different ones.
You can hedge any of your crypto to get money. Get cash.
And you can withdraw. You can either get a US dollar deposit to your bank account, or you can.
Okay.
You can withdraw.
So it'd be 2-to-1 now.
2-to-1. You can withdraw a stable coin. So like that's a whole class of cryptocurrencies that are like pegged to the dollar. So there's one called Tether. There's one called USD coin. There's one called DAI, DAI. There's a whole handful of these like dollar pegged cryptocurrencies. And so you can like, so because people use these for, a variety of reasons. Like, you could be borrowing, like a major use case of this is trading. So like people will like put money, like they'll have a bunch of Bitcoin, and then if they see an altcoin that they want to invest in, they'll just, put their Bitcoin up as collateral, withdraw a loan in dollars, take those dollars over to the exchange, and then they'll buy that other altcoin. And then, so say you took out a $500 loan and you bought $500 of Dogecoin, and if Dogecoin goes up and now your $500 is worth $600, you only owe the $500 that you borrowed plus the interest over that time. And so that like $600 minus the $500 plus interest, like that's your profit. And so like,
But what would be the difference of just exchanging your Bitcoin for that other altcoin or whatever you're saying? On some sort of what's the benefit of borrowing?
Because if you think Bitcoin's also going to be going up in value too, like if you want to have both, because because it spreads out how long you have to pay it off. Like you can pay this off over like 2 or 3 years, and so maybe you want to hold Bitcoin over that amount of time. You don't want to risk the Bitcoin by just outright selling it for the
because you still own the Bitcoin.
Yeah,
you just have to pay them back.
Yeah.
Okay, so
still own it.
So essentially, you get the $500 loan, right? Say you get 2 to 1, you invest $1,000 worth of Bitcoin, you get 500 cash.
Mm-hmm.
I'm going to go plug that into something else that I think might go up. Say I make $100, just to make it easy, like you said. Then I could essentially sell that, take my 100 profit, take the 500, pay it back. I still have my Bitcoin, and maybe that just went up too.
Yeah.
So you keep both assets.
Yeah, exactly. Or maybe like the value of your collateral went up, and then like you can make payments on your loan from your collateral. So like your other investment goes up, the Bitcoin also goes up, and now you're like the amount you have to pay back is just lower. And so like that's
obviously long term is like you're not trying to just like it's a long term type deal where you
especially with like when you're doing like they're not like I call this 1 to 2 leverage, because there's like on the other hand like there are other exchanges, so like Nexo is like you have to do 2 to 1, and the minimum loan size is $500, but there are other exchanges that offer up to 100x leverage. So hold on. Yeah.
Because I was gonna jump in, because I was like, that's exactly what, like before we even met, I was already leveraging Nexo to just buy altcoins.
Mm-hmm.
And then when, because Colleen put me onto you, then when I heard about Hex, I bought like like 2K in dollars, and then I was like, no wait, I'm just gonna do the same thing. I'm just gonna leverage like what's in the Nexo account. Especially since Hex had to be staked and then like had to be long term. I was like, okay, there's going to be a different way to do this, and I was using it. But then it's 2 to 1, and so I was looking at it because I'm going to do like another round of investments, and I'm going to do it the same way. But I just want to be able to get more. Like instead of it being 2 to 1, I want to be able to get more. And I was looking. That's why I jumped on, because I was like, I'm going to ask you for a better one. So
yeah. So there's Kraken is an exchange that offers 5 to 1. So you can't you can't withdraw the money here to like you can't take, like when they lend you the money, you can't actually withdraw it from the exchange, but you can like buy altcoins that are on Kraken with credit. So some of the pairs they offer like some, I think with like XRP for instance, they only do like 3 to 1. So if you have $100 of Bitcoin, you can buy $300 worth of XRP. But like things like Ethereum, they do 5 to 1. Bitcoin dollars is 5 to 1. So like depending on just like the size of the other coin, they offer the different like margin levels. But there's like there's
what was that you said? Kraken, Brian?
There's Kraken. Here, I'm gonna put these in the chat, and then
I'm like trying to like take notes now. So like Nexo, which is really cool, by the way, the whole concept. I had no idea.
Yeah, it's.
Hey, Brian, I have a question for you as you put that in the chat. How do they tax? How is the U.S. government taxing gains in crypto these days? I mean, all these profits, are you able to spend it in those cryptocurrencies and not get taxed on the gains, or how is that kind of started unfolding?
Yeah, so like profits from like trading, like you're supposed to report as income. What makes it difficult to do is like, say you're trading Bitcoin for Ethereum, and like you're taking your profit in Bitcoin, like, you know, how do you report? Because that's not a dollar gain. And so I think that's like, you know, because like, you know, you may not even be paying attention what the dollar value is, or like, you know, the price fluctuates so much that like, you know, how could you like go back? Like, what are you going to do? Like, look at the exact moment that you made the trade and like find what the price was. Like, it's just kind of like that's pretty murky waters. But like, as like the thing that you do get taxed on that you should report is like how much money you took out by selling the Bitcoin. So like that's kind of where the lending comes into play, because if you buy, so if you like say, you know, you get paid from your job, you get taxed from that income, and the rest of it you buy Bitcoin with. If you like, you know, bought Bitcoin and then at a later date sold the Bitcoin to like buy something, that's a taxable event. But if you, instead of just like selling the Bitcoin to buy something, if you took it over to Nexo or another one, which I wouldn't really recommend because they had a pretty bad like security breach, but this other one is like called BlockFi, and there's like a whole handful of these like lending services. If you take your money, your Bitcoin over there, borrow against it, the loan you taking in the loan is not a taxable event. And then when you repay the loan in dollars, like, you know, say you're repaying with like the dollars you're getting for earnings, so you're getting taxed just from having earned the dollars. You know, maybe your employer, like you're withholding it, but you're not taxed when you're repaying the loan. And so a way to like spend your cryptocurrency without, or just, you know, and limiting the taxable events is to borrow against it and then, you know, use that to buy, you know, whatever you want to buy, and then just pay back the loan and then take possession of your Bitcoin and then don't sell your collateral. So like that's like that's like how, you know, you can limit your tax exposure, you know, while being able to like, you know, leverage, like, you know, because you like the way, I mean, this is part, just like, this is my perspective on it. Like, I really don't plan on selling Bitcoin ever, because it's such a strong form of collateral. You can just get such strong leverage, and like you can do, you know, like you can do a lot with that. And so like, I'm not really looking to sell, you know, one, because it's like, you know, if it's within a year, it's like, you know, like a short-term capital gain. Like it's like taxed differently. But like, I think that in the long run, just like borrowing against your cryptocurrency, that really limits your tax exposure. And it's also like kind of good, just like general financial practice. Like, what's that saying that like you shouldn't buy something that you can't afford twice or something? Like, it's kind of like that with these, you know, where you have to put down $1,000 of collateral to get a $500 loan. That's actually kind of like a good, like, maybe you shouldn't like buy things unless you can like really afford it. And so like, you know, having the money that you can put as collateral, get a line of credit, and then, you know, pay off over time, and like, you know, strategically like time your loans so that like, you know, you're getting a good rate at, you know, where, you know, if price is going down, that's a good time to borrow. Because if price is going up, then your collateral is going to go up in value and you just have to pay less. So like, that's kind of where it fits into like, you know, taxes and just like general like savings, and you know, when savings turn to spending, is it like, you know, using the Bitcoin because it's such a good collateral, and it's just like a growing industry. Like, this is an alternative to a credit card. You know, like, you know, with credit cards, the benefit is that like you don't have to have the money at all and you can spend it, but you're going to be in debt, and the interest rate's like 24%, you know, whatever your credit card rate is. But like, so like, you know, this is just like an alternative to where like, you know, in this space, you get a better line of credit the more you save. Whereas in credit, like with credit cards, you actually get a better line of credit the more you spend. Like, you know, like you boost your credit by like, you know, getting a loan and paying it back. So it's like, it's just a different game. And I think the incentives in this space are like, I think a little more wholesome and like healthier for people. Like, people should be saving. Like, you should always be like accumulating more wealth. And having like a lending ecosystem like this that like incentivizes you to like, you know, have before you want to buy something, you should be able to afford it twice. Like just like having that as like an underlying incentive. And then because of like the price fluctuation, it enables you to like, there's always like, at least 1 or 2 or 3 times a month, there's always like a couple day period where you can borrow against your Bitcoin, and you'll get you can get a really good like rate versus your collateral, just because like, if price is going down, you borrow against it when like, the price is $9,000. In a couple days, your collateral is now worth $10,000. Like that's like what you want to do. And so like that, and I think that really fits into all this, like, is that like it is a way to like prevent, like to limit how much, like to be involved in crypto and limit what you're being taxed, because like if like, if there's going to be wealth transfer, and like people that are like accumulating these assets are going to be like, asserting power, like having like the incumbents trying to like claw back, like, through any like legal way that they can, like trying to claw your money in, like just participating in these like borrowing and lending ecosystems, like really kind of helps shield you from that. And like, that's like, something that you can do as like, it's like a check and balance of like, preventing like overreach on the part of governments, like where government law enforcement employees are killing their customers. Like you can like fight against that, by accumulating wealth outside of their system and limiting how much like because like, like until like the rest of the world kind of catches up, like until your employer's okay with paying you in Bitcoin, until like that infrastructure is kind of in place and like, the adoption's at that level, you can't really like fully opt out. Like if, you need to acquire money somehow, but like once you have the money and you're able to get it in Bitcoin, that's like, that's like a serious way that like you can really start squeezing out, in any business that is like, killing their customers. And like that's where I think is like really kind of the important element of this, is that like, like you don't need to get a line of credit through like their credit bureaus. And like you don't need to participate in their banking systems. It's like they're like alternatives here, and in many ways they're like better. There's more. There's like, while there is risk, like all the risk that there is, that's just like potential energy for the reward. And so like, it's a trade-off, but it's becoming a pretty desirable trade-off that people are willing to make more and more.
Well, it's interesting, Brian. Interesting stuff.
Yeah.
Just me working for a bank. You guys don't know, I work for Bank of America. Like this is really the large scale conversation here. It's just another way of, you hold Bitcoin, right? That's competing with banks on just like a checking or savings account. Now this is a way to compete with credit cards in the banking industry, and eventually, the whole goal of crypto, in my opinion, and when I talk to my good buddy Xander, who's like, I'm going to get him in the next meeting, by the way, Brian, but
yeah.
It's like just another way to take on the big banks, and if you can get better interest rates, and to your point about it being 2 to 1, the worst thing that can happen is they collect on something that already covers what you've borrowed and potentially is worth more now. Does that make sense?
Well, like the worst that can happen is like if the value of your collateral goes down, they're going to start liquidating some of your collateral at that lower price.
At that time?
Yeah. So like,
right, like if whatever it was took a plunge, if it.
Yeah. They'll send you an email. They'll say margin call. The value of your collateral has dropped below your like your credit limit or whatever they say. Please deposit more collateral, or else we're going to start liquidating part of your collateral to make interest payments. And
right.
like they like, and then that's just, kind of comes down to like, managing it. And that's where people really get like, no one really gets wrecked on. I mean, like price really has to go down, like for you to lose, like on your like 2 to 1, like price has to, or 1 to 2, like,
we have to go down more than 50%. Right. If it's 2 to 1, I mean, it would have to.
Yeah. So yeah, it has to go down like 50% for you to, for you to get liquidated.
But I just want to make sure there obviously is an interest rate associated to this. So you also, in general, like, if you're using this as a tool to almost reinvest, like, I guess you just want to make sure that, you know,
Yeah,
you're,
so like the value of your
isn't
collateral plus the interest rate that you think is going to, like, you have to
right.
expect that like the thing that you're buying with the borrowed funds is going to be worth more than like than having just like sold the Bitcoin outright from the start.
Right.
I guess the trade, like that's the
Okay. So, okay. And then on the other hand, what do people use credit cards for, right? Whatever the fuck, right? The shit. Like,
yeah
so if
yes
this could be a way to just take cash and spend it on whatever,
yeah that like
because you have the asset in the coin, right, to do it, and it could be a lower interest rate, so it's a benefit. It's an alternative to credit cards, and theoretically, you could pay off credit cards with this.
like you can
Right?
use it to consolidate your debt into you know, like, because like one, I mean, just the interest rate is lower because it's like fully secured,
Mm-hmm.
you know, it's secured 2 to 1,
Mm-hmm.
and like, you know, you can pay it off over like a long period of time, and like there's no like minimum payment, like there's no like weird fees or anything, and so like
Which is the best
that's a
part.
great point, which I didn't really consider until you brought that up. But like, yeah, like as far as like debt consolidation goes, like, you know, I mean, usually people that are in a lot of debt.
For someone right now, and we're having a crypto conversation, like someone wants to get out of debt and start investing, right? That's the goal. Like we all want to be debt free. I want to, until I buy a home. I want to just be able to have a mortgage. I don't want to have a car loan. I don't want to have credit card debt. Like if someone wanted to consolidate, it could be a very good solution to that, interest rate wise, right? And
Yeah,
if you own a lot of crypto, because but the end goal is to not have debt, and then you're just using it as an investment tool. And what's the worst that can really happen? You know,
we're seeing is just
I
the
don't know.
can go down, and like, you know, but like when the price goes down, it's, you know, it's kind of like a double edged sword. Like yeah, we all get excited when the price is going up, but when price is going down, you can start thinking, okay, now this might be a good time to borrow against my Bitcoin. You know, like, oh, I like, you know, like when price goes up, that's when you pay down your loan. When price goes down, that's when you borrow against it. You know, or you buy, like buying, like you can kind of treat buying and borrowing against it kind of in the same one, and like selling and like paying off
Mm-hmm.
your loan. That's kind of like the same activity. Like, you know, you want to borrow.
It's taken me you talking about it to like really wrap my head around just the theory of this, and it makes perfect sense, because your price goes down. Say Bitcoin went 5K per Bitcoin. Okay, they're still going to give you, you know, whatever you want, the 2 to 1, and then you just hope at that point when it goes down, it'll be a perfect time to do it, because you don't lose that asset, and inevitably it's going to go back up.
Yeah, like so many people, like when they see the price going down, like they start thinking, oh my god, I gotta sell. But like smart
Nope,
people are thinking
I
like,
bought today. I'm out of that. I'm not a day
yeah,
trader. I'm not a day trader. Bitcoin is like, for me, it's like the only crypto I own. I'm making my way towards a full one, and like I'm treating it just like you told me. I started investing in Bitcoin, and I got out of it like 2 years ago, and then I jumped back in hard like, you know, 6 months ago.
yeah,
So I'm excited to see where it goes and everything. And I mean, I don't know. I used to dabble in Litecoin too, because I used to think the future was like Bitcoin's your long-term savings, and Litecoin is what you go pay, like
yeah.
eventually, like you go use it to pay for your subway, right?
Mhm.
It's kind of like what you're spending money, and the Bitcoin's your investment long term.
Hey, I gotta jump off really quick, but I am truly impressed with everything that's been said. I don't want to interrupt too much. I want to let you guys keep going. I
Bridges,
will.
you going to sleep?
No, I gotta go walk this dog. I just have blackout shades in my room, so it's always dark.
Dude, that's
Um,
funny, because Brenda just went to walk the dog, and I looked at her, I'm like, are you?
yeah. Again, I don't want to interrupt. I don't want to interrupt too much. I do want to say I just see the value of this so much moving forward, especially coronavirus too. People don't want to be exchanging cash. So it's just more of a reason to put everything on an electronic grid and have more of a reason to have cryptocurrency. I think there will be more platforms and much more resources for people to regularly use cryptocurrency as we make our way forward. I think you guys are just the pioneers of it, and I think it will pay off. I definitely plan on trying to invest moving forward, and hope to be much more of a participant in these videos. So let me know, Brian, but I got to jump off, guys. Again, don't let me interrupt you. Jump right back into it.
All right. Thanks for joining us, dude. It was great talking to you.
Absolutely. Talk to you guys soon. Have a great one.
Yeah. So Chad, that was actually a really good question. It touches on something else about like, as far as like spending, like that's like, I think a really good use case for like some of these other coins. Like just because, and this is something we've talked about a lot on these calls, like Bitcoin's really optimized for like very large and very infrequent transactions. Like it's not meant to be like something that you buy like your coffee with. It's meant to be something that like, a nation pays to like import, 1,000,000 barrels of oil. Like that's like, it's meant to be like a reserve asset, like, like a form of money that like a central bank might hold like alongside gold, or like, what like major corporations like use like to like, measure their balance sheet. Like that's like the whole purpose. Like cryptocurrency can be kind of a misnomer because, well, like for things like Bitcoin, I think it's a misnomer because like Bitcoin is more of, it's meant to be money, which is different than currency. Like currency is what's meant to be like spent and like supposed to have like really high velocity. So, changing hands really quickly. But like things like Bitcoin, things that are more like long-term, like savings use case coins, those ones aren't meant to be, or they're not like optimized for like currency. Like you could pay someone in it, but like, dollars work just fine for paying. Like, or, like, other cryptocurrencies that are like faster, like, like Litecoin, like you said. That kind of leads into the other like area that like, even if like you, like always the hard part is just like, say you're at the store, like, what if they don't accept the cryptocurrency? Like that, like, cause in many cases, like businesses like, they're not really losing out on anything by not accepting it because they can always just buy it. Like most businesses aren't, they just don't have the wherewithal to like buy and hold Bitcoin, or any cryptocurrency. And so like, to them, even so, like accepting the thing that like has the most like users already, like that's probably a better business decision for somebody, unless they have like some specific reason why they need to accept only Bitcoin. Like maybe like a can't like, like Daniel and Colleen like work in, like in the cannabis business, and like that's like an area where like their finances are suppressed, and so like in that setting, like there's like a reason to like use a different payment system. But like if you're just like a regular store, like Visa and MasterCard, like those work just fine, and those aren't really like part of like the systemic problem. Like that's just like the payment rails. And so like, using cryptocurrency for like payment, like an option that I think is really interesting. They actually have one coming on Nexo. Is this whole concept of these, they're like prepaid debit cards that you load with a Bitcoin wallet. So like Nexo, I'm waiting on the Nexo card to come out. One that I actually have it's called the BitPay card. I actually have this one right here. So if you, can you see my face?
Yes.
So I don't want to show you guys my card, but like, this is like it's a prepaid debit card that you can load with, just with Bitcoin. So like, say you go to Nexo, you have Bitcoin as collateral, you take out a loan in, the one that I use is USDT. So, so this is Tether. Let's see where we can find the chart of Tether. Yeah, so like you borrow in Tether. So it's like, pegged to $1. It's like right around, it goes up and down, but it's like it's $1. And then with the tether, you like buy some Bitcoin, and then you deposit your Bitcoin into your BitPay wallet, and then you load your debit card. So you load this card with money from that. So in that moment, you're selling the Bitcoin to like load this debit card, and then you can like take this to an ATM and you can get cash right there. And so like the actual time between taking out a loan on your Bitcoin collateral to the time where you can actually like spend it either on this card or like even like this supports ATMs. That time is actually really, really small. So like, like as far as like spending it goes, like for me, like I don't spend Bitcoin. I just spend dollars that I don't put into Bitcoin. Like I always, keep like, opting out of this doesn't mean that like, you have to have like 100% out of it, like until that's like really necessary, until like it's difficult to spend, or like the opportunity cost of holding the dollars is like that great. Like, if like the dollars are devaluing so fast that like you don't want to hold them at all, like maybe then like, but like, like for like your daily expenses, keep the dollars that like, you don't want to be like selling Bitcoin to be like paying for stuff. You just like can view that as like, that's money that you like just aren't going to put into Bitcoin. Like the things you have to like, so like, whatever you're paying to live, your food, your gas, whatever fun you have, like, you don't need to like, if like you're really bullish, you'll just buy Bitcoin and then borrow against it and like extend those payments out. But there's risk to that, and, so you just got to kind of balance the risk and understand like where the market's at. But like things like BitPay, like with this card, like I think this is probably what spending Bitcoin and crypto looks like, is where you're not actually spending the crypto. You're, you have a card that's linked to a Bitcoin wallet, and on the back end, your Bitcoin's being traded for dollars as you're spending on the card. So like you may not be spending like, you go to the store, from the store's perspective, you're just paying with a regular Visa card. They're getting paid in dollars, but from your perspective, it's like you paid in Bitcoin. So that's probably what like before like like on its way to where like these cryptocurrencies are like widely used. Like right now, they're mainly used for speculation, which is like they need to only be used for speculation for like a number of years in order to like build the ground floor that like makes it something that like an economy can like base itself on. But like, probably the first way that people will be spending is just like easier ways to like spend it. And so,
Brian, can I interrupt you for 1 second?
Yeah.
So that credit card that you use, do you use that for big stuff? Because you don't spend your Bitcoin for anything, do you?
I barely use it. I've used it like
just to show off.
Yeah. So the thing that I've used more. Yeah. So I just wanted to like see how it worked.
Just to flex.
Yeah. Like just like, just trying to learn the technology. I actually don't like flexing. Like I don't really want to use it because like, I don't want to like put like a target. I don't want people like try to, even though like literally if someone like tried to like rob me of my crypto, they wouldn't be able to get it. Like, so like they'd really have to like, no matter how bad they like fucked me up, like it's very difficult to steal. Like I don't even like store it in a way that like you could come to my house and take. Like, you have to know like, where the keys are divided and like, what like how to do, like it's not like, but like you just don't want problems. And so like I don't really like, even though I'm like fairly public online as far as like promoting financial literacy around this topic. Like sometimes I like that's part of the reason why I don't necessarily spend that much on it, is because it's like I don't necessarily want like just this like random guy at this restaurant to like think that I might have Bitcoin that he could like try to extort out of me. Like even though it'd be really hard for him to do that, like I just don't want that situation. So that's kind of part of it. And then two, like like I said, like rather than like because in that moment you're like selling Bitcoin, like I would rather just spend dollars that I haven't put into Bitcoin then like use this. But this is like more for like emergencies. Like if I have like a big expense that like I need to like, you know, take out a loan to do, like the fastest way for me to like take my Bitcoin that maybe I'd borrow against to like get, you know, like say like for some reason I need to like spend like a couple $1,000, you know, that, and like I don't want to, you know, maybe like the price of Bitcoin's like low and I don't want to sell. Like I just mainly have this as like a way to quickly get either physical cash from crypto, because you can use this at an ATM, or like if I really need to like spend it and like, you know, and you know, I'm not holding enough dollars to like cover it right there. Like that's what I kind of have this for. It's more like, you know, part kind of like just toy, like just kind of see how this works and like, you know, seeing if this might be a product that I might want to launch at some time, some type of like crypto credit card. But like, you know, it's kind of like more for like emergencies. Like I rarely use it. Like I can't even remember the last time I used it. But it is an, you know, people do use it.
Do you see yourself using the Nexo card then as that comes online?
Yeah, because I think that would like if you could borrow directly into that. That's because like also with the BitPay card, like you get taxed for like, because you take out the loan on Nexo in dollars, and then to deposit the money into the BitPay wallet, you have to use those dollars to buy Bitcoin, and then you take the Bitcoin and you put it on the Nexo wallet or on the BitPay wallet, and then when you are ready to spend, you have to load the card, and by loading the card, you're selling the Bitcoin and like loading it with dollars, and so that is actually a taxable event, and so that's one of the trade-offs with these cards. Even though like that is kind of like you know, it's kind of an unsettled issue of like, okay, is that an investment or is that just like using like Bitcoin as like the payment rails? Like, you know, you weren't buying it for like speculative reasons. You're buying, like you only bought the Bitcoin for its transactional use case. Like, you know, that's like you buying like, you know, buying oil to like use in your car as opposed to like buying oil like like to buy low, sell high. Like, you know, so that's kind of where it like, you know, you might have to make that case if they're coming to audit you, and like, you know, it's something that's kind of undecided. It's like, you know, because like the government's generally treated as property and treating like trading like how they would like stock trading. But like because it has like these other use cases like beyond just like speculation, you know, like just using it to like send the money from, you know, like so that you can like load this prepaid card. Like it's kind of unclear about how that's really going to play out over the long run. But that's like kind of another reason why, like, you know, if you need to spend money, just spend dollars that you haven't put into Bitcoin yet. You know, because like, you know, there's less hassle and like, you know, there's just like, you know, less steps, and yeah. So that was a Chad. Thank you for, you know, kind of bringing that up, because, you know, that's kind of like, you know, like I don't know if you dropped off, but like kind of answer your question about like, you know, what the cryptocurrency that people are going to be spending. Like I think that before people like merchants are like actively accepting, like on a broad scale, actively accepting crypto, I think the like spending of crypto is going to look more like the, like, you know, people having these, you know, like BitPay's card or like Nexo's card.
That is what I was, and I'm going to be all over the place when I start. This is my first meeting because there's so much I want to learn, but that's kind of what I was getting at.
Yeah.
I think when I was talking about Litecoin, right, before I dropped off, like that's what I want to get into is the future of merchants taking payment that way. You know, like you have Apple Pay now, and what's the other one? Like,
yeah, like
Google Pay.
I could see Apple Pay having something like, you know, Apple Pay integrating a Bitcoin wallet where
Right.
like you can have that in there, and like you can, you know, you can like credit your Apple Pay account, you know, where you, like, you know, you're paying an Apple Pay. So like, you know, the store, they're getting paid in dollars, but like you're paying with Bitcoin that you have. that's like,
Mhm.
that's traded for dollars before it's spent. And like, that's just handled like through Apple Pay. Like that's pretty much how this like BitPay card that I have works, is that you, like, it's just a prepaid card. So like, that's probably what the first phase of like,
Something to the degree of like when you spend it, it converts to dollars, or it just goes to where the merchant immediately liquidates it, or I don't know, something.
yeah. So for like, it's a Visa card. So it's just,
Yeah.
it's like, like the merchant's getting dollars. But
Yeah.
BitPay also had like, the other part of BitPay's business is it's a merchant processor. So it's
Mhm.
like, software that you can use if you have an online store or even an in-person store. Um, it's like a way that you can accept payment in Bitcoin, and you can either like, and you can like set what percent of like, you're getting paid in Bitcoin. Maybe you're going to put like convert half to dollars and hold half in Bitcoin, or like whatever you decide to do. And so like, that's, another way that like merchants could start adopting it, is that like, with like good like merchant payment solutions. Like right now it's like there's Stripe and Square and, Apple Pay, and like those are fine. Like, and then because like cryptocurrency really isn't like, it's not competing with this market. Like the thing that really makes crypto take off, it's more in like the monetary markets. So like, like Forex, and then things like gold, real estate, art, anything that money launderers use. That's a use, like art, real estate, gold, like that's a strong use case. Like that because those are like the big dollar like figures. Like if you look at like the Visa market cap, like Visa alone is worth like $418 billion. That's like a major like payment network. And if you look at like the here, let's look at this so we can see kind of like the other levels of like just like the global. Let me pull up this visualization that shows the. Yeah, this is from a book that you'll actually love, Chad. This is going to be required reading for you. It'll really speak to you. There's this guy that I've really learned a lot from. His name's Trace Mayer. He wrote a book before Bitcoin existed, for his site called Run to Gold. He's just like a big gold bug. He was like the first person to ever recommend in public to buy Bitcoin when it was a nickel. And he wrote a book about like where gold fits into like, it's called The Great Credit Contraction. And it's literally like what you see playing out right now is like what this book was like talking about. And this book was, I think this author might've been part of the creation of Bitcoin, because like this guy used to have a site called How to Vanish. Satoshi vanished. Like there's no trace of him. So this guy is kind of already into that. He had a site called Run to Gold. He's like, he has like these podcasts going back to like 2006, talking about like how gold is like the solution to like the global monetary chaos. And then like in this book, if you like did like Control F and swapped every instance of gold and you replaced that with Bitcoin in this book, it would make 100% sense. Like it might as well have been written about. It was written about gold, but it might as well have been written about Bitcoin. So I'm going to send you this PDF. I think you'll really enjoy. It's like a pretty short read, but you'll definitely learn a lot, from this. But
Yeah, for sure. That's super interesting. Do it.
yeah, it's got this this picture in it, and so like kind of you look at the like the market cap of Visa, like so like the currency market, like the payment rail market, Visa is like 400 billion. MasterCard's probably around that. PayPal is probably around that. So like maybe like a couple $1 trillion. But like when you look at these other forms of like capital, so like gold and silver, like 2.4 trillion, just like the general like money, 4 trillion, like debt, treasury bills, government, like just like government money, like 65 trillion, securities, like stocks and equities, things that people hold, like assets, 100 trillion, commercial real estate, private business, residential real estate.
Is that total market cap on the right?
Yeah. And like, so like these are the markets that like are really ripe for disruption. You know, like the payments rail, that's like a race to zero. That's like a race to like cheap and fast. Whereas like these, like this is like wide open, like, you know, there's people that hold, you know, and these numbers, like this was published in 2009, probably double or triple all these numbers now. Like, like now it's like a situation where like holding any of these other assets, it's like you're, by holding that, you're bearing the opportunity cost of just not holding Bitcoin, because Bitcoin's been on such like a, you know, it's just the way it appreciates in value. Like that's kind of how all these things are going to have to be measured going forward. And like Bitcoin like fits in here with like gold and silver at like the base of this, like, you know, like this is like, that's like the thing that is money. And then all these layers on top of it are like these additional like, you know, just like use cases and like things that like wrap the money. And so like, you know, and of all those things that like Bitcoin can do, like Bitcoin fits into the power money one. It can fit into the currency, but that's like, you know, it's kind of secondary. But like really, I think it fits more into like, especially real estate and commodities is what like is the asset class that Bitcoin's most similar to. In some ways, it trades like a stock, but it's not like you're not owning part of a company by holding Bitcoin. And like holding Bitcoin doesn't give you any rights to like dividends or like you know, liquidation if like the company sells, like, you know, so it's not like you're holding a stock, even though it trades like that. So like, you know, all that to say, just like, you know, the use cases that are outside of currency are like, those are like the big money use cases. The currency use case, that can generally be solved without like a blockchain. Like, you know, you don't need like for like small transactions, like it's actually like, you know, there's like a margin of error. Like, you know, you can get like if you're taking a bunch of really small transactions, every so often someone could send you like a counterfeit transaction that you don't catch, and that's not going to kill you. Whereas like Bitcoin is like impossible to counterfeit, and by being impossible to counterfeit, it makes it really hard to use for like quick payments, because like, you know, every 10 minutes a new block of transactions is added to the Bitcoin blockchain. And like, you know, so like, you know, at minimum it takes 10 minutes for a transaction to go through. But on that first transaction, like you as the person that received it, there's a non-zero chance, even though it's really small, there's a non-zero chance that like the miner who mined that block is trying to spoof you and trick you into thinking that like you're getting paid. And so like you, like most places when you spend Bitcoin, they don't accept it until it's like been confirmed after like up to like 6 blocks. Because like on the first block, like the miner could be spoofing you. It would be really expensive for them to be doing that. And it'd have to be a really big expense for them to like pay the money required to like try to spoof the network. But like, you know, after that second one comes in, that like next block that comes after that first block, that will tell you if the previous block was valid. And so like every new block that gets added to the blockchain, that like further makes that transaction permanent and valid. It like proves to you that the transaction, you know, that the person that said that paid you, it like proves to you that they actually had the money that they paid you. And so like because Bitcoin is like meant for like the like large infrequent transactions, the confirmation time of like what proves that the transaction is valid, it's just longer. So that like just makes it not really useful for like small like in-person payments. Whereas things like Ethereum, like it goes through in 10 seconds. And, you know, so like you can like confirm a payment in like, you know, 20 or 30 seconds. And so like, you know, these different currencies just have different trade-offs, you know, for those. And like, you know, for small ones, like for currents, like if the use case is for payments, it doesn't necessarily need to be as secure as Bitcoin. So like, you know, those are just like the trade-offs that like, you know, the market makes when they're like determining, okay, what crypto am I going to use for like a savings use case versus what crypto am I going to use for like a spending use case? because like for savings, it's like you really want to prove that that money's yours. You want it to be, mathematically impossible to steal from you. You want to be certain that like the supply is what it is, and so because of that, you sacrifice like speed of transactions, you sacrifice anonymity and privacy. Like there's a whole other class of cryptocurrencies that are like completely private, but like with those ones, it's kind of hard to audit the supply. It's so private that you really don't know what the total supply is. So that makes it not as useful. That's like a really strong use case of Bitcoin, is that it's like the money supply is known by everybody and it's like impossible to manipulate. Whereas like, these other like privacy based currencies, like privacy coins, they call them, it's harder to like measure the supply. And so it doesn't really, so like those ones are used for currency, but like they're not really used for like savings. And like I focus on the ones that are savings because the price goes up when people buy something and then don't sell for a long period of time. And so like people that are buying something just to send it because it's like fast to send, they're actually buying it with the intent to sell it. Like you want to invest in things that people are buying with no intention of ever sending. They want it. They don't want to send it to anyone else. Like they want to be in possession of it. And so like that's how like the currency ones are useful. And like the most commonly used cryptocurrency is actually Tether. So the one that like you borrow on Nexo, you can either get it deposited to your bank account or you can get it in Tether. Tether is actually the most like widely used cryptocurrency. And that's because people use it for sending dollars overseas. Like people use it kind of like an international Venmo. And then also it's like how people like who are like crypto traders, like, on one exchange, like it's like where they arbitrage the exchange rate difference between two exchanges. So like on like Coinbase, maybe the price of Bitcoin is $10,100, but on some other exchange, the price is, $10,400. On that other exchange, maybe someone will sell Bitcoin for USDT, which is a cryptocurrency that runs on Ethereum. They'll send that USDT to the other exchange and then buy Bitcoin with it at that lower price. And so like Tether is kind of like the rails for like sending money between exchanges for people to trade. But because it's like built on Ethereum and it's like meant for like transactions, like you don't expect it's literally pegged to the dollar. Like you don't expect, like this green line here is the Tether price. It just hovers around $1. Like you don't expect Tether to go up in value, because it like its primary use case is a currency. Whereas like Bitcoin's primary use case is like savings money. So like you do have the expectation that it goes up in value. And so that makes it like less desirable to spend. And so like the developers that work on Bitcoin, they don't prioritize fast transactions. They actually do things that actually have made transactions slower, because like that's the trade-off that they make for like making sure that it's like fully scarce. Like the supply of Bitcoin is the thing that's like mostly protected. Transaction speed and transaction volume isn't really like, that's not something that like that's like a priority.
What's the supply? The supply of Bitcoin is what, 26 million will eventually be
21.
21?
Yeah. So 20.
Okay. So some of these other ones, it's not known.
Yeah. So some are not, I mean, like things like, so like.
But they all run on blockchain, right?
Yeah. Just because it runs on a blockchain doesn't mean that you can fully audit the supply. And like some coins don't even like the transactions run on a blockchain, but like the coin itself is like actually run outside of a blockchain. Like XRP is one where like the company behind it like just owns all of it, and they just dump hundreds of millions of dollars on their users' heads. Like every month they're selling a ton of XRP. So like the XRP price just goes down, because like they have so much of the supply. But like things like, there's one called Monero, which it's like what people like Warren Buffett think Bitcoin is. Like Warren Buffett thinks that Bitcoin's just like anonymous currency that like criminals use. Like real criminals aren't using Bitcoin. Real criminals are using Monero. And that's because like Monero is like so real criminals are using Monero for payments, but they're probably once they've like laundered the money by sending it with Monero, they're probably settling into Bitcoin. Like at the end of the day, they're accumulating Bitcoin. But like the thing they're using to commit the crimes, that's things like Monero, which like you cannot look like. There's something we always do on this call. We always look through the Bitcoin. It's called the Block Explorer. If you go to blockchain.info, you can like look at every single Bitcoin transaction. You can like totally see the supply and where all the transactions came from and to. You look at Monero's Block Explorer, you cannot see that at all. So it's like fully anonymous. So it's useful for like very private transactions where like in that moment, the criminals, they don't really care what the total supply of Monero is. They just care what the current exchange rate is. And that like the person that they're sending it to is going to be able to accept it. So like they don't really care about like the supply because it's like it's used as currency. It's not really used as money. Whereas like Bitcoin, it's like used as money. So like the supply matters more than in things like Monero. And so that's like, like people think that Bitcoin's like anonymous. It's really not at all. Like it's actually like if you're trying to commit crimes, like more people are getting caught, like just like careless criminals, like so probably not very serious crimes, because like people are committing serious crimes, they're going to take like serious measures to like cover their tracks. But, like just like idiot criminals, a lot of people get caught using Bitcoin because like maybe they'll like steal some property and then tell whoever's sold it to them or that they're selling to like, oh, just pay me Bitcoin, and then they go and take that Bitcoin and then deposit it on their Coinbase account that they like use their real ID to set up. And then now like the Bitcoin transactions from like that stolen property are like linked to your Coinbase account. And if they have a warrant, they can go to Coinbase. They're located right here in San Francisco, and so like people have been caught with like having stolen funds, especially like there have been instances of like cryptocurrency exchanges getting like Bitcoin stolen from them, and they just follow the money because you can. It's like fully public. Anyone can see it. So a lot of people actually get caught up by using Bitcoin for crimes, which is pretty interesting to.
That's actually crazy.
Yeah.
That's crazy.
Yeah, but yeah, and like.
But in general too, like from what you've been saying, like I get just the overall trade-off between efficiency or transaction speed versus,
Scarcity.
Yeah, I mean that makes total sense.
Yeah. Yeah, and so I guess so what we talked about, like, I guess Bitcoin is like a savings account. You can opt out of like bank savings account, checking account. That's like kind of like the BitPay card. You can use that for spending, or just, if you really want to like fully opt out, or you just like, just use the dollars you didn't buy Bitcoin with to spend, like your choice. Credit, that's one I think is really exciting with like the lending. And the last thing was like things like 401k. And this is where like Hex, I think, really plays in. Like everyone, I think everyone on here already, except for you, Chad. I mean, we've talked a little bit about Hex, but like Hex is marketed like it's a certificate of deposit. So Chad, do you remember when Brent Seabaum was accused of stealing all that money from the chapter? And you remember that?
Yeah, I do.
So there were allegations.
Is this a fraternity story?
Yeah, there were
The chapter. That's awesome.
allegations of the.
I haven't heard Brent Seabaum's name in a minute, but yes, I do remember that.
There's this guy that like, I don't know, like I do not know. I don't want to like slander this person. But he was like widely accused of like taking money from like the fund that was supposed to go to a new house. So the money was held in a CD. So the only reason I knew about CDs when like I started hearing about Hex was because like I remember when I was like a freshman, all the seniors were like, "Where's our CD? Like, where's all that money?" And like allegedly the alumni advisor ran off with it. So like I knew about CDs from that. So like that's what Hex is marketed as, a CD where you like lock your funds for a set amount of time. Once your time lock is done, you collect your principal plus interest. And like I think that's like a good way to frame Hex. But like with Hex, like just the more I like have like gotten involved with like the ecosystem and like really like start like modeling like kind of like the rate of return on like your time locks. I think it's actually more like a 401k as opposed to a CD. Like CDs are really just like alternatives to a savings account. But with Hex, it because you really can't move your funds. Like once you lock your coin, like you don't have to lock your coins, but once you lock them, it's really expensive to unlock them. Like you get big penalties if you lock. Like if you say you're gonna lock for 15 years and you only lock for 1 year, like you'll lose almost all your Hex. And so it like really pushes the time duration of these time locks. And so
sounds like a 401k, early exit fee.
Yeah, exactly. Yeah. And that's why I think that it's a little easier to understand as like a 401k, where it's like something that I think it's like with Bitcoin, I think it's good to always be buying, whenever like you're getting paid, you should always be adding to your savings. And likewise, like with a 401k, it's like you're always adding to your retirement fund. And so Bitcoin, it's like kind of the savings that you can very easily use for if you need to get a line of credit, you can have it. Or if you just need to sell, you can sell. It's very easy. There'll always be a market for it. And like with Hex, like the incentive to lock is so it's so much incentivizes you to lock as long as you can that it starts fitting into like that retirement age product. And so for later on, and where in Hex, it's like you're expecting interest on your Hex. Like right now, like with my Hex time locks, my average annual interest rate right now, which is it's increasing over time. It actually increases as my shorter stakes end and my longer stakes are the ones that are left. The actual average interest rate will keep increasing. Right now it's 17% on the Hex. So and that's extended out, for on average. So my average length is 8.8 years, and my average interest rate is 16%. So what is that? 16 times 8? That's over 100. That's 100% just on the Hex. So the price of Hex could cut in half, 50% in between now and then, and I would still break even because the interest just makes up so much because my I have really long stakes, and so for me, I'm viewing this as this is really long term, where even though it's fun to watch that Hex price day to day, I care more about what the Hex price is in 10 to 15 years.
It's that long. When you're buying Hex, you're price locking it for that's crazy, right? I think of Bitcoin as a long-term investment, but this Hex thing, you're talking
Stake
about
till
10
you
years.
die, Chad. Stake till you die.
All right.
The whole thing.
Die stake.
Die stake, not stake till you die. Sorry, die stake. Sorry.
Yeah, but you don't have to. There's different strategies, and this is something we've talked about in one of our previous chats. Where here, I'll pull it up here. This is a great site. So people stake for all different types of so here's the feed. Okay, so this is a site, because it's on the blockchain, everything that happens is public. You can see it all. So you can see everyone's time locks. So okay, this is actually a pretty cool example.
40 days. Who's this?
Yeah, so this person staked $16,000 for let's find one that ended today. Okay, so this is actually a good example. So this person, they staked 1.3 million Hex, so that's about $5,200. They staked it for 42 days, and in that 42 days, they earned 13,000 Hex, which is $55. So 55 over 5,200, they earned just a quick 1% on their stake just by having their Hex. It's still in their possession because you're not depositing it somewhere. the way this works, like I shit you not, it literally gets sent to an address 0x000000, like 28 zeros. It's called a burner address. It literally like it's sent to you, like it's an address that has no that you click, like send the money. It's like lighting it on fire, and so like, but then like when you end your stake, you like remint those coins. So like when like these are stake, this person held like he's still full in possession of the private keys to like move these when it's done, and he earned 1% over a 42-day period. And so like
And that's on top of any sort of increase in hex price.
yeah, which when you look at the
Now I gotta go look at I want to go see that.
so the,
Oh, yeah,
the
that's
best
what I
way
wanna
to
see.
look at hex price is go to I'll put this in the chat here. It's called uniswap.hex.vision. Oh. So you'll see we're in a nice dip right now. Unless price, oh, it's already been rebounding. So like, here's the, so like that person, so what, 42 days ago, what would that be? Like, today is June 1st. So then there's May 1st. And then, so April 20, so say that person opened up on 420.
Mm-hmm.
They're, during that time, so this is like this is actually a really good example because this is like a trade-off of like,
But like in theory, you gain. So it said like $50 some in interest, but it's gonna end up being more like $80 in interest if the price going up.
Because like
that's their net gain.
Yeah, like the value of their like what they had like $5,000 of hex today. So that means that on the day that they bought that hex, say they bought the hex on that day, that was something like $3,500. And then so the value of their principal went up 67%. And then the 1% ROI that they got on that, like, I guess like that didn't go, because it's like that was just like minted when they closed their stake. But like, so during a time lock, the value went up this amount, and then plus they got the interest. But the trade-off here, this is a great example. Like during this time, price hit like during the time that their coins were locked, price had gone up 200%. And since that person had the locked funds, they couldn't sell at this point. Like they, so like the trade-off for like, the guaranteed interest is the opportunity cost of whatever price does while your coins are staked. And so like, that's the trade-off that everyone in the market's making is like, okay, like, so me staking for 15 years, like there are probably gonna be days in that time where like price completely like rips your face off. Like you're just like shocked at like what it is. And I'll just be, like, I mean, even though like I have stakes ending like just about every like 4 months in between like next year and 15 years. So I do have some hex coming back on, in shorter periods of time, but I definitely waited more towards the end.
Yeah, are you diversifying your stakes? If that makes sense.
Yeah, it's like diversifying your stakes. Yeah, it's like
just
want to have some to sell, and some I don't stake. Like of all the hex I have, like 25.
So you don't have to stake. I thought you had to stake, or else you're getting hit with like some sort of a. Well, no. What was the thing about exiting early though? Like,
so
you get hit with a fee.
You get a penalty.
So if you want to, you can, but you're going to get hit with a fat penalty.
Yeah, and some people actually like there's like a break even point where like because a lot of people who bought like down here when it was like nothing, maybe they had longer stakes, or maybe they had a stake ending in a couple months and they'd already served like more than half of it. Maybe the ROI of just like the appreciation of value, if they were to emergency unstake, like the ROI of what they had minus the penalty still could be greater than like, what like they had initially spent. So some people like wanted to lock in a profit up here, and so they ended their stake, took the penalty, but even with that penalty, they're up so much that that like the penalty, like even though they lost some hex, they could lock in a profit right then, and like
Mhm.
that was a good trade, but you never know, like and that's
It's
like
a good trade, and then that's their decision. You could reinvest or whatever. I mean, but
yeah. So like you see it all play out. Like it's fun to look at this feed of everything going on, because you see like this person here. Okay, this is actually a good example. Like for like short stakes, the penalties really aren't that bad. So they had 13,000 hex. They staked it for 250 days starting 48 days ago. So they must have started so April 20th was there, so they're like a week before. So this person must have bought like right around here. So like
when it was nothing.
It was up like 10x from here, from the very bottom,
Mhm.
but it was before this like massive run. And so like, to them, it's like, they're probably up like 800%. Okay, I guess not, like that's at the top. They were up 800%. But okay, this person's up like 400%. And, they've served, 48 out of the 250 days. So just about 20% of their, and so the amount of interest that they earned is $180, but the penalties they paid is $500. And so like the like net penalty of them emergency unstaking was only like $200. And to them, that's like nothing, because if they're up like 400%.
That doesn't take into account just the overall change in price
Yeah,
of
so
per
like
hex.
they
That's
want
just saying they paid X amount, they gain that interest, but it doesn't say how much that hex is now worth, I guess.
yeah, so this is where it says how much it's worth. It says it's worth $1,300. But say like this person, they started their stake when prices gained 400% since then. So what that's like, is that free?
Gotcha.
No, and so like maybe to them it's like they put in $3,000. Now it's worth $14,000, and they're willing to pay this like difference of the $490 minus 188. They're fine with that like penalty, because like their initial, like their principal has gone up in value so much. And so like
Right.
they're calculators that like there's some sites that help you calculate what your early unstake penalty is, and it helps you find like that break even point for you, because like like it's like for shorter stakes, like it doesn't really matter so much, like like $300 penalty on like a $13,000 thing, like that's really not that much. But for longer stakes, that's where the penalties are really, really, really big. Like sometimes you'll see things where like sometimes I think they must be accidents, where people have like a 15-year stake they opened up 2 days ago, and then they emergency and stake it, and they lose all their balance. Like I think it must be a mistake that sometimes people make, but like the penalties are really big for like long-term stakes. But when you've gotten through like 20% of like a short-term stake,
I see what you're saying. So if you do a 15-year stake, that's 15 years. It's gonna be a much more penalty than if you pulled out 50 days from that versus 50 days on a year-long stake.
And what's interesting about Hex is that so these penalties get paid to the stakers. So every time people emergency end stake, everybody who has stakes, the amount that gets paid out to those people, it increases by this amount. So like every person that's emergency end staking, they're paying their coins to the people that kept their stakes. So like every day the yearly inflation rate is it's 3.69%. So that means that the daily inflation rate of Hex is 0.01%. And so like every day, 0.01% of the total supply which is, here we'll see, look. So total supply, 248 billion. Okay, so 248, 123 times 0.0001. So right now, every day, about 24 million hex are paid out to people whose stakes are ending today. And it's divvied up based on, or so not paid out to everyone who has a stake open today is accumulating their percentage of this interest pool. And the people that have longer stakes are accumulating more of this pool compared to the people that have shorter stakes that are open, that are like going on today. And so like, this is like, this like 20, like the total supply times 0.01%. That's like the daily inflation. And so on top of that, just like the baseline inflation that gets paid to stakers, the penalties get put into this pool as well. So the more people that emergency end stake, the more hex that you get paid out. But usually people are emergency end staking to sell, and selling pushes the price down. So it's like you're getting more hex, but it's also pushing the price down. You know, but like for people that have really long-term stakes, they're actually okay with people, you know, panic selling when the price is going down, emergency unstaking, because like they're getting more hex at like a lower price. And so like in the long run, like when their 15-year stake is ended, every single day where people emergency end staked, some of those coins are going into their account. And so like the way it works is that the people who stake the longest and who stake the most get the largest percentage of the like daily inflation. And so like and it averages out to like where there's like a single person who is like the average length and average size stake, they are getting 3.69% interest rate. And then people that are above average are getting more, and people that are below average are getting less. And so if you don't have stakes open, the money supply inflates away from you. Like, you know, like dollars, like it's always increasing, and like the supply is always increasing. And like, you know, so that like limits your purchasing power relative to total supply. And then with hex, if you don't have stakes, it's inflationary from your perspective. But for people who are above average length, above average size stakers, the inflation is getting paid to them primarily. And so from their perspective, their amount of hex that they have is over time a greater and greater percentage of the total supply. So from their perspective, the currency is actually deflationary. You know, like Bitcoin, it's inflationary up until all 21 million are mined, and then it's like slowly deflationary as people like lose their coins, or is like the transaction fee on Bitcoin becomes higher than like what the minimum like decimal unit is of Bitcoin. And then like some Bitcoin just will never be able to get spent because, you know, it's just like dust. You know, it's like, you know, you lose pocket change in the couch type thing. So like Bitcoin becomes deflationary. But like with hex, it's like for some group of people who don't have stakes open, it's inflating, like it's inflationary to them. But people who do have stakes, it's deflationary because they're getting paid the inflation. You know, it's like you're seeing like all the stock prices are going right back up to where they were before. Like all this freshly printed money, like for every $1,200 that people got, Wall Street got like $18,000. So like all this money is going straight into Wall Street, these financial institutions, and they're buying assets, they're buying stocks. So like because like the money supply is inflating at a massive rate. Like you look at let's look at the money supply.
I'm gonna need a separate lesson just on hex, like another 2 hours.
This is like a
because this is in reality Bitcoin hex, which is what that's like what I'm most interested in is the long-term savings / retirement. It's just the most to
Yeah,
get
it
in now
requires
makes
the
the most
less,
sense.
like the least skill, because like
Seems the most safe.
yeah, it's definitely the least risky. And then like with others, it's like you have to be really accurate in your timing of when you buy and when you sell to make money. Because like with Bitcoin, it's like you can generally buy at any time. If you wait long enough, like you'll be fine. But like so this chart that I pull up here, this is it's called MZM money stock. This is what's published by the Federal Reserve Bank. So this isn't like the full picture. Like in that book, The Great Credit Contraction, that I'm going to send you the PDF to, it actually shows an excerpt from Alan Greenspan testifying before Congress that the Federal Reserve doesn't even have a definition for what the money supply is. They said that it's so difficult to like calculate what the total supply is, and so many things impact it that are outside their control. Where like the Federal Reserve does not have a definition for the money, which is like very interesting. Whereas like with Bitcoin, like and like Hex, it's like the supply is like fully known in advance and public, and like there's no funny business, like no political whim or like crisis response where they need to like inject new money. Like, and so like the Federal Reserve publishes like different measures of money supply. One that I like to look at is the MZM money stock. So this is all the money that's in checking accounts, savings accounts, money market accounts, and physical cash. So like not credit, not like these other types of like CDs, certificate of deposits aren't in this measure. This is meant to be like the liquid cash. And just in the past, you know, like you can kind of see like over time, you know, the money supply. Can you see this on the chart very well? Like it just kind of grows at like usually around like 8% per year. They say the benchmark inflation rate is 2%, but it's really closer to like 8 to 10%. So it's been growing and growing and growing all this time. But here in the last 3 months, the liquid money supply has gone up 20% in the last 3 months. And so like so much of like just like the money supply inflation, it's going into like
Are you saying that's the stimulus money?
So it's stimulus money, and so like money
People are spending more, or while they're I guess.
Well, so like there's there's the stimulus money, and then there's like the Wall Street like financial institution money, which the Wall Street funds get. When they get it, it's not put into this like money stock measure. When they use those dollars to buy like, you know, shares of Apple or different ETFs or whatever stocks they're buying, like they're buying the S&P, the person that they're buying it from, so like maybe you on your Robinhood account, like you get those dollars and then you can deposit them. Like now they're in the money supply. That one's gone up like 20 some percent. And like so the inflation impacts you as just like the regular dollar holder, because the inflation wasn't paid to you. The inflation is paid to people that aren't you. They're paid to these financial institutions that are considered too big to fail. So like, you know, like inflation is fine if you're on the receiving end of it. Like if you're the one getting the newly printed money, that's good for you. You know, from your perspective, like your amount relative to total supply is going up.
AKA the banks?
Yeah. So like the banks, like, you know, it's called the Cantillon effect. It's like prices start going up on things that are closer to the source of like where the freshly printed money comes from. So like, you know, like in like this, in like this, you know, in the real world, you know, like people that aren't you, they're getting the inflation. And that's why like your purchasing power is going down, while like other people are like able to like secure the gains from like, you know, the inflation. But in Hex, like by you being a long-term staker, you know, by proving that you're like committed to this, called a cult, you know, or an economy, or like, you know, by proving that you're like committed to this like financial system, you're the one that gets paid that inflation. And so like, you know, from your perspective, you're doing well. And then for, you know, people like, you know, they make the trade, you know, maybe people that aren't staking, they're making like the trade-off where like, okay, they don't really care about the long-term, like collecting the long-term inflation. They want to have their hex ready to sell in case like price pumps up and they can get a really like, people that want to like trade it, like to them, like they're not really playing like the staking, like they're not like they're looking for gains from like buy low, sell high. Whereas people who are like, buying it for the staking use case, they're hoping for buy low, earn more over the duration of your stake, and then sell high, to where like your total balance grew and then the value of your balance has gone up too. Like that's like, the like goal with staking. So it's like a longer term goal. And like by participating in that, you have to bear the opportunity cost. I sold I've sold some hex to pay a loan that I used, like a Nexo loan. I took out a loan on Nexo to buy hex, like somewhere down here. And I paid that off by selling some hex up here. So I had a pretty good exit, but then I bought in and it kept going down, which is like, because I wanted to stake. I wanted to like, because every day that like you don't stake, like the amount that you'll like the more you stake, the earlier, the more you'll earn. And since like I've been into hex before launch, like I've been like, pretty active in this like community. And so like,
When did it launch?
December 1st.
Okay.
And so
Brian, I gotta leave here.
Oh yeah.
I got 8 minutes till that other thing, but
Okay.
Daniel, those links that you dropped, were those both on your channel?
Yeah.
They're former videos. They're former dip catcher conversations in it.
Okay.
We go deep in hex, so dive into those. The
Cool.
second one is a condensed portion. It's all about hex, so maybe start there.
Okay. I'm gonna just go to the YouTube channel. So I gotta save these links. I'll just copy them, but that'll be my homework.
Yeah, man. Thanks for joining. This is really good. Dude, we'll keep talking more. But,
absolutely, man. I'm gonna drop off here in a sec. And it's nice to meet all of you.
Yeah, thanks for joining, Chad.
All right.
Great questions, man. Thanks for joining.
Yeah, thank you.
Yeah, so yeah, I mean, like, that's like the opportunity cost that I wish I could, looking back, I wish I could have sold more at this top, but like so much are staked and like, so, that's like the trade-off in the staking, which is like, which is what I think is really cool about this is that like in no other coin can you make up for like if you bought up here, like it's okay because like, you could have bought down here and had more hex to start with, but to make up for like the hex you missed out on by buying, like say you bought when the price was up here, like, and then price went down, like 35%. So like, you don't have to like feel bad about like missing out. You could have had more hex. You can like make up for it by taking the hex that you bought up here and just staking it for longer. And so like, if you're like regularly buying hex, like a strategy that you could, implement that, that is, pretty like, pretty good is it like, every time you get paid, maybe put a little bit of money into hex. If price goes up in like the couple weeks after you bought, maybe sell it and like take profit and like, treat yourself to something that you wanted, or like, pay off your, maybe pay off like a loan on Nexo that you used to buy hex, or like, buy another cryptocurrency that you might want, so like on days that you buy these dips, maybe keep some liquid to sell. But if you bought and then the price goes down, then just like stake that hex and then just like wait for the, and then like as price going down, like, when you get paid next, then you buy some hex at hopefully the lower price. And then, if price goes up, then you can have short-term gain. Price goes down, you just stake it for longer, and then you just have like, you just have another chance. That's like what I think is really interesting, is that like, there's always a chance to make up for like buying, because it's always hard to like time the bottom of any dip. Like you never know, like people that bought, like right over here, like, you know, they probably felt like they were buying the top, you know, at that time, but then it like went up another like 300%. But then the people that bought up here, you know, it only went down. So like, you never know what price is going to do after. But like, Hex just gives you that opportunity to like, you know, you can just make up for any, like, no matter what happens after you buy, you can like make up for it. You know, it just, as long as you have like, you know, the right time horizon, you know, as long as you have like, you know, because you don't want to go like all in on anything. Like you don't ever want to be like so indebted that like if price goes down, you have to like emergency unstake and like pay off, because that's like double loss. Like, you know, so like always having more money to put in, and like just being conservative about like, you know, not over trading like that. That's probably like the best approach for most people. And Hex just kind of gives you that flexibility. Oh. Does anyone
Brian,
else have any?
2 hours going strong. I love it. That's amazing.
Does anyone else have any other questions or any other topics that we wanted to talk about?
What was the name of that book? The Great Credit Contraction.
Yeah, the Great Credit Contraction.
Will you send that to me as well? I think Hema is that the one you're talking about, Hema?
Yeah, that's the one that I'm talking about.
Yeah, I would love to read that as well.
It's so much. Like you'll pick up a lot of my talking points are from this book.
Nice.
Yeah, that's the yeah, I just shared it in the chat. It's so I love it.
Perfect.
Oh, nice. Thank you. That's the PDF. Okay, cool. The only question I had is what I opened up with earlier. Just what are your thoughts on what was happening here in Puerto Rico and like,
Oh yeah.
you know,
so
out here.
so like from my understanding, like kind of that movement to like moving to Puerto Rico, that was like a lot of the people. So like I know the people in EOS were involved. A lot of that was like part of like kind of like shielding of taxes, like because there was like some stuff with like the SEC that was going on, and I think the IRS and Puerto Rico. Like a lot of people that are gold investors, like this guy named Peter Schiff, who's like he's famous in the Bitcoin world because he's like a pretty famous critic of Bitcoin. One of these people that like told all of his followers to not buy Bitcoin when it was $1, and like he's so shameful of like being so wrong that he just like continues to like berate it. Like he'll never like unless you just has a massive amount of Bitcoin, but like he makes money selling people gold. He runs like a gold exchange, so like he like you know he doesn't want to publicly support Bitcoin. He probably has Bitcoin realistically, but like he lives in Puerto Rico for like tax reasons, and so like Puerto Rico is a good place for like crypto, like as far as like taxing goes. And so like there are people that like got like stupid rich from like, you know, like the EOS crowd, like they raised like $4 billion of Ethereum, and then like the value of their EOS was like pumping. And so like their Ethereum was going up, their EOS was going up, you know, like they're on top of the world. But then like you know, so they're like, you know, I remember first hearing about the Puerto Rico thing, like kind of at the peak of the bull market. And, you know, now like, you know, Ethereum's down 80%, EOS is down probably 90%. So I think they just have like a little bit less. I mean, those people probably are good traders, and, you know, they probably still have a lot of money. But like, I think that like the, you know, other people that were like, oh, I'm so crypto rich that I need to go and like conceal my earnings. I think a lot of those people actually just ended up not being as wealthy as they thought. And so I think that like, you know, that kind of, you know, that hurt it. And then also the like hurricanes that were going on and earthquakes. Like, I think that like that kind of showed that like, you know, living on an island like Puerto Rico, like, yeah, it's like an island paradise, but like a hurricane can come and wipe out your, you know, you can build a Bitcoin citadel there, but like they better be like really good houses, or else like, you know, they're gonna get complete trash. Like, I think that maybe just like people like maybe just weren't like as motivated to like, you know, really activate like, you know, like actually following through on like trying to build like a crypto haven in Puerto Rico. So it's probably just like a combination of those things where like, you know, maybe not as rich as they thought they were, or as rich as they were on paper during that, like at the start. And then like, you know, also like, you know, there's like big opportunity, like people that are in crypto, like you really pick up on the opportunity cost of like holding other assets. So like if they were to gonna like be like selling Bitcoin or selling Ethereum or selling EOS, whatever it is, like during like a down cycle, if they're gonna be like selling their crypto to like fund some like real estate development, like they have to outperform just like holding that Bitcoin instead. So like, you know, is like the value of their real estate plus maybe just like the intrinsic like personal value of like having the real estate and being able to be there, like is that going to outweigh just like being able to like hold the Bitcoin, you know, starting like then, you know, so maybe like, you know, maybe like when the prices are back up, maybe that's when like, you know, they'll make more efforts where like they just have to like sell less Bitcoin to like, you know, fund their like, you know, real estate development, you know. So I think, you know, kind of combination of those factors, like, you know, where those people like at the end of the day, like they have to make a business decision, like is this real estate investment better than just buying and holding the Bitcoin? And then with like the risks of like, you know, like the hurricanes and earthquakes, like my girlfriend was just in Puerto Rico. She's a structural engineer. She's like a seismic expert. She's inspecting earthquake damage at some of these like National Guard sites that her like are clients for her company. And so like, you know, she was just there and like, you know, destruction from like earthquakes, hurricanes, like, so it's kind of a tough place to live. Like people that are like seeking refuge from like taxes, they'll probably just go to Nevada. I think Nevada is probably the number one haven, and then Wyoming is becoming another one of these havens. I think New Mexico actually could be too. Mexico kind of fits in with Wyoming as far as like, you know, like taxes go. So I think that, you know, there's just other alternatives to like going to live in Puerto Rico. So yeah, that's kind of, but I don't know much about like really what's going on.
Where they are, what they're doing. I remember hearing about that 2 years ago too, and and then I saw what happened with EOS, and I was like, I wonder what happened. So, you know, I haven't heard anything. Like I went on online just to look or see if there's like some community or anything out here happening, and like there's nothing at all. I'm only out here for like a month, but and I've explored like some of those sites with the earthquakes and everything. Like I'm just all into that. Going to all those, like Holly knows. But yeah, I totally see that. And I actually spoke to a couple of people about Hex, and I mean, you know, the thing that I do, and I have a community, and I was talking to like a couple of my people, and I'm gonna have a call with them tomorrow. And Colleen, I'm actually gonna hit you up about this because I want you to be on that call, and they're just gonna pool some funds together maybe and do like just a Hex purchase or something, and I'll probably just use Nexo and like see the best way to just leverage that. But I'll check out the other two exchanges, Kraken and the other one, and just take a look at those just to have other options.
Yeah.
Yeah.
And, Nexo, I think, is the only one you can actually like withdraw, because like you have to like withdraw it to buy the Hex.
That's right, because it's not on the exchange itself.
Yeah, Kraken lets you do like 5-to-1, but like you can't withdraw the borrowed money. And same with like, there's one that does 10-to-1 that you might want to look into called KuCoin.
KuCoin, okay, I know KuCoin.
Yeah, KuCoin. And then if you really want to get crazy, something that I just discovered, which is like actually super fun. There's a site called Prime XBT. I don't recommend really doing this because like you're probably more likely to lose money. They offer 100-to-1 leverage. So that's fun. And then they also have this one that's like it's like a binary option where you bet up or down. There's 2 buttons, so you don't even place an order. You just hit up or down, and then like you can choose like 1 minute, 5 minute, 10 minute, 15 minute. And at the time, like say you open up like a 10-minute up order, if like at the time from when you like 10 minutes after you do that, if it's above, you get 65% of whatever you bet. And so it's like
Can you put the links for those?
Yeah, so
okay, cool.
Prime XBT. So that one, if you can't use it in the US, you need a VPN. if you're in the U.S., but since you're in Puerto Rico, you actually you could log on to Prime XBT and get started right away. You don't even need to put your name down on the account.
Yeah, I got super excited now that I'm like overseas.
Yeah, yeah.
That made me think going overseas.
Like Prime XBT is the one. So primexbt.com, and that's 100x binary options. So that's gambling. Like, so approach it like you would go into a casino. Like, have fun. Hopefully you win. But if you lose, don't let that be all your money. So that's that one. And then, so
I have a amount. You know how like when you do like a P&L, you have an amount for like bad debts and loss. Like we just have that in place. Like this is our loss allowance here.
Yeah, that's where that fits in. So KuCoin. Yeah, so you said KuCoin. So that's up to 10x. They also have they have all kinds of stuff on, like a bunch of different. So that's 10x plus what's it called? Altcoins. I think they have more altcoins than Kraken, and then there's Kraken.
So anything that you cash out on the way Nexo does?
So no, KuCoin. I don't think you can cash. I think KuCoin is you have to keep it there. I actually use KuCoin like with Nexo. When I take out a loan in USDT, I actually convert the USDT into Ethereum on KuCoin.
Okay, let me just write that down.
I feel like that would be. I go Nexo to my ETH wallet, my MetaMask wallet. Then I send the tether to KuCoin, and then I trade it for Ethereum, and then I send the Ethereum to my Hex wallet, and then I buy Hex with the Ethereum. So that's how I've been using Nexo coin. And then Kraken does 5x.
Can you do that sequence one more time with KuCoin? You said you buy.
So yeah, so like Nexo loan for Nexo loan. So it's like a Nexo tether loan that gets sent to my like MetaMask wallet. Just because I think it would work if I just directly like sent to the KuCoin one, but like you're supposed to withdraw the Nexo loan to a regular Ethereum wallet. You're not supposed to withdraw it to a smart contract. And usually the exchanges, when you deposit your Ethereum or any other ERC20 on the exchange, they usually route it through a smart contract. So like I take it from like directly from there to the MetaMask one, just because like I know that it works. I've never tried not doing it. Too expensive for me to like want to test that. To save 20 seconds, like it's not a big deal. So I go Nexo tether to MetaMask, then to KuCoin, where I trade the USD. I'm writing this here, so I'm gonna write this down. That's something else too. To trade USDT for ETH, then I send ETH to MetaMask, and then I go to Uniswap, or so that's Hexdex, and then I swap ETH for Hex, and then 15-year stake. So that's I just put it in the chat. So I'm gonna so something I want to do is like kind of make like little visuals of like little flow charts of like how to take a loan in crypto, like how to invest a loan you take in crypto, how to like use the leverage as a tool. And so I just wanted to like write these down. But
simple. That Google Doc that you have for Hex is something like that would be awesome, because you spell it out. It's like super simple to buy Hex with that Google Doc.
Where is that Google Doc?
Let me find it.
I know I haven't been on like the last 2 or 3 calls because I've just been running around like the country trying to get out of it.
Running around the planet.
Like always. Off the planet sometimes.
Right, at least you're on the planet at the moment.
But no, but these, like, all of these tools, like, this has been great. I've had a lot of fun playing with Hex, and I just, yeah. And to get like this new group in on it, I'll probably have them join the calls too after I have a call with them tomorrow. Because I'm just doing an exchange with them, and I was like, hey, can I just pay you in this coin instead of giving you US dollars? And they're like all for it. So I was like, okay, cool. So like, let's see what we could do.
Dan, you should did you post that about the chauffeur driver wanting to be paid by his boss in Hex? Did you share that on the group or just to me? The guy's like, the wealthy man in the back is like, oh, so you want to be paid in Hex? He goes, yeah, I want to be rich like you so I don't have to work for you.
Yeah. It was the butler driving him around or whatever.
Yeah. Post that on the
I'll find it.
Yeah, it's cool.
That's perfect.
So Hema, here's the link to that. This is like an unofficial guide. So this is, let's see when I made this. I made this document on December 4th. Is when I first made this. Yeah, so it's this doesn't even paint the full picture. I made this when I knew like nothing, like I knew like a fraction of what I know now about Hex when I made that, but it like kind of paints out.
It was super helpful. I mean, after that first call, I think Dan actually sent that to me. We didn't know that it was on the internet. Is that the one where we didn't know that you're the one that wrote it, but it helped me.
Yeah, I found it on your sent.
Oh yeah.
Oh, unsent. Yeah.
Yeah.
My Johnny Cash account. Yeah,
Awesome.
It's been fun. It's been thank you all.
We talk about the next one, that Trust Wallet, and that other coin that you found. Can we talk about that?
Oh yeah. So, so Trust Wallet is just a wallet that that I found that actually like the reason I was looking for a wallet that you could do the smart contracts from the wallet on mobile. Like, you know how you have to like get on Chrome and use MetaMask to like, buy on Uniswap or to like enter a stake. I was looking for one on mobile that worked. And some of these crypto wallets have these like built-in web browsers in the wallet that link up to the wallet, and so you can use it. But Apple is actually cracking down on those for like because of like money transmitter laws or something. So Trust Wallet has worked over the last couple of weeks, but I just got a push notification saying that like they're going to shut off their browser because like Apple doesn't allow that. So on Android, you can use Trust Wallet for mobile, but I think that like someone sent me a link to this other wallet that apparently you can have a browser. I haven't looked at it yet, so I'm not ready to like recommend it. But like, I think Trust Wallet will still work like in the short term, but that's just like a wallet that you can like just buy Hex on the go with.
Oh, got it. Okay.
Yeah. And so that was what.
I'm not that on the go.
Yeah. Like it's like mainly just because like sometimes like I wanted to be ready for like, especially like there've been all these juicy dips over the last couple of weeks. I just wanted to like have some ready to buy. So I've been buying these dips in Hex. And so I just have it there because like I'm checking that price on my phone, and then when like, because like with like on Uniswap you can't set an order. Like when you set it like on any other exchange, you can like say like, okay, I'm placing a bid where if Bitcoin hits $9,100, like execute this order. With Hex, like you can't, like it's all like you can't place an order beforehand. You have to like place it in real time. It's like you can't just like set an order. And so like I like to just have it ready there, like in case like price is down. Like usually there's like only like when you look at the Hex chart, like there's usually only like a couple minute window where like, you look at the price like dipping down in here. If you like zoom in, let's say like, on a 10-minute period. So even like today on this dip right here, it dipped down. It was only in here for like an hour before it like went back up. So like, I just wanted to, figure out one for mobile. And because I feel like that could be an easy way for people to get in. it's like, getting set up on a Chrome extension and having to learn that's kind of hard. But doing it on the mobile was actually really fluid. But I think that Apple's starting to like crack down on some of these apps that support the like crypto wallet browsers. So I don't know how much longer it's going to last. But yeah, so that was what Trust Wallet was all about. So the other coin that I'm really interested in, it's called Mimblewimble coin. It's actually so it's a Harry Potter curse. It's known as the tongue tying spell, where it ties your target's tongue and prevents them from making current speech. And like kind of the play on that is that in Mimblewimble, the like how like when we're looking at the Bitcoin block explorer, you can see like the to address, the from address, and the total amount of that transaction. In Mimblewimble, you can't see any of it. Like it's pull up a Mimblewimble. Let's find the block explorer. So like compare this to the, I'm going to pull up the Bitcoin block explorer so we can take a look at that at the same time, just to compare. So like Bitcoin block explorer, you see total number of transactions, how much was transacted, and who every transaction went from and to, and how much. You go to Mimblewimble block explorer, you see fucking mumbo jumbo, like nothing. And the only the person that you see where it says verify transaction proof, the only people that can verify a transaction are the sender and the recipient. By sending a transaction, it like creates this file that you can use to verify the transactions. And so like by uploading if I was to send you Mimblewimble, we would both get like a copy of this file that decodes this, like where it says hash right here. It's just like these numbers. By us like using the file that we have, we can decrypt this, and that tells us what the amount that who it's from, who it's to, and the total amount. And you can also prove, and this is what makes like, remember earlier today I was talking about how with like Monero, a trade-off that you make, like you get privacy on Monero, but you can't fully audit the total supply. Mimblewimble solved that, where you have full anonymity, but you also have a fully fixed supply that's provable. Like you can prove that that there's like not somebody who's like secretly like creating more and more Mimblewimble that they're able to just pay themselves in. Like they can't hide behind like anonymous transactions to do that because it's impossible to do. So that's like a big difference between what I think makes Mimblewimble like a viable, like, something that like is used, like I think it'll be like used as a currency, but it has elements of like that make Bitcoin a strong savings thing, like the fixed supply, provable supply. That's like a strong point that like makes people want to buy and hold it. And I think that like a lot of Bitcoin holders, like people that have like massive amounts of Bitcoin, part of the reason why they never want to sell is because they don't want it to be ever like linked to them. They don't want people to know that they have control of like a couple thousand Bitcoin. And so, from their perspective, holding something like Mimblewimble could be an alternative to holding even Bitcoin, because like if privacy really matters to you, like in your lifestyle and your like perspective and like your unique situation, if like privacy really matters to you, like holding something like this could be an alternative to like holding other cryptocurrencies, where like somebody who is really motivated could triangulate you to like an address with like some level of certainty. In Mimblewimble, that's like impossible. So like I think that like Mimblewimble has elements of Bitcoin. And Mimblewimble is actually a technology that was originally proposed to be included in Bitcoin. But with Bitcoin, like some I've touched on earlier, is that they don't, they're very reluctant to add features. If anything, they remove features from like the Bitcoin protocol, and adding something like Mimblewimble like would be very difficult to get like kind of like the social consensus in order to roll it out. And so like that, like things like Mimblewimble, like it was originally proposed for Bitcoin. It ended up just like running on its own blockchain, because to get it implemented into Bitcoin is probably just like too tall of a task for those, you know, for those people. So, or you know, for like just like the whole ecosystem. So like it exists outside of Bitcoin, and then like, you know, now it's like something where, you know, you can, you know, judge for yourself, like, you know, what's going to appreciate more in value, what's going to provide me more, you know, more value in the future. Like it's having something that's like fully private, fully anonymous. Like, you know, like if this isn't going to outcompete Bitcoin in price, is the value that I'm getting from like having the full privacy and anonymity, does that make up for it? You know, that's like the trade-off that people are gonna have to make. You know, it's like, what do they think the price is gonna do? And like, why is the privacy like useful for you in your setting? And so like, I think Mimblewimble is really, really cool. Trace Mayer has always been talking about Mimblewimble. Trace Mayer has actually been like ostracized from the Bitcoin community because he's been promoting Mimblewimble coin. And all these idiots that like were shouting that Hex is a scam, like all these like Bitcoin maximalist people that were like the same people like saying Richard Hart's a scammer, Hex is a scam, and now it's up 100x. Like those same people are the same people that are saying like, oh, Trace Mayer, you're a shitcoin shill, you know, you don't even really like Bitcoin, why are you talking about Mimblewimble? Like that to me is like that's a buy signal. Like anytime like people who like are so committed to Bitcoin and Bitcoin only, like I'm very committed to Bitcoin. Like I view that as like I get really sad if like I lose like, you know, lose money. Like if I lose Bitcoin trading, like to me Bitcoin's like the thing that really matters. But like I'm also open-minded to like other things and like other trade-offs and like other opportunities. You know, so like I'm very welcoming of other things. Like there's a whole subset of the like Bitcoin culture that they're just not. Like they take pride in like only being about Bitcoin and like immediately rejecting everything else that's not Bitcoin. You know, like that's just like a subculture. But like whenever those people are like screaming about something, like really angry about something, I think that's a good thing to buy. And so kind of like how they were screaming about Hex, and then Hex price has, you know, from when they're screaming about it down here in December, you know, even amidst like a bull market or a bear market right now, it's up like, you know, 1,000%. Like that's a good sign when people are like threatened by Bitcoin, or Bitcoin people feel threatened by something else. You know, with Hex, it's like, I think it's like they're threatened by like a competitive savings product, that long-term hold use case. And like with Mimblewimble, like having like full anonymity, that opens up a whole use case for like for businesses, especially. Like if you're a publicly traded, or I guess the publicly traded companies is different because like you're publishing your financials. But if you're a private business and to you it's a trade, like what you do with your money is a trade secret, or like you don't want your employees knowing how much each other make. Have like paying all your employees in Bitcoin might not work for you, because they can just look at the wallet that Bitcoin came from and see, okay, this person paid, me and all these other people. Like, why am I only getting 1 Bitcoin when this person is getting 2? Like, so like people can like do some like forensic accounting and like, get information about like the company based on like the transaction history on Bitcoin. But things like Mimblewimble could be like, Mimblewimble could be like a corporate use case coin where like the transactions are private for like trade secret protection, but like the supply is like fully auditable. So like, there's like not risk of like somebody like secretly printing a bunch of Mimblewimble. And so like, I think Mimblewimble could have that use case of like, money, like in the sense of how Bitcoin is money, where like the privacy and anonymity, it's not so much to like conceal transactions for like like as part of like the currency use case. It's more to like conceal like corporate transactions because those are trade secrets. How much you're paying your vendors, what you're buying, when you're buying it. Like those things that like people like use kind of like the anonymity of dollars. Like you can't really like audit like where someone's spending their dollars very easily. I think Mimblewimble could fit into that use case. But as far as like buying Mimblewimble and like using it, it's like you have to like know how to like use the terminal here. Like, let me see if I can. I don't even know where it is. Yeah, so like you have to like use this like the terminal. Like it doesn't have just like there's not like an app that you can just like download and like hold Mimblewimble. It's like really technically challenging to do it. So like it's not something that like Hex is like stupid easy to buy. Buy and hold. It's like I think Hex is like one of the easiest things in crypto to get your head around as far as like actually buying it and holding it. Like the MetaMask wallet in the Chrome browser, that's like dead simple. Mimblewimble, it's like a whole different thing. So it's like something that like it's pretty difficult to like do. I figured out how to I bought a little bit. I figured out how to buy it. But like, that's part of the opportunity. If it was something that like everyone could just like download an app to buy, then more people would have it and the price would already be higher. But since it's something that like is pretty hard to buy, like the difficulty in buying, plus like the risk of it just being new and like, the longer things are around, the more likely they are to not go away. And since it's pretty new, like, the likelihood of it going to zero, it's probably finite, but like because there's like the risk of it going to zero, the upside is like very high. Whereas like with Bitcoin, like the odds of it going to zero are really, really low. And so like, that's why altcoins, certain altcoins over like certain periods of time are probably going to outcompete Bitcoin just because the risk of them going to zero is higher than that of Bitcoin. And because that risk is higher, the reward is higher because it takes so much less money coming in to push the price up, like an order of magnitude. Like in order for Hex to double in price, it takes like $10 million. In order for Bitcoin to double in price, probably takes like $10 billion. Maybe not that much, maybe 100 million. I don't know what the number is. You could look it up, but like, things that are new, they have more risk, but because they are new and have more risk, they have more reward. So that's just the trade-off. And I think Mimblewimble's in that phase where it's like still very early because it just came out and it's hard to buy. And it's like a whole different, like it's not like sending a Bitcoin transaction. It's not like sending an Ethereum transaction. It's like a whole new skill set to learn. It's like, I think a good opportunity to buy, but it's like also really, it's hard. Like it's not very easy.